Hello and welcome to a new episode of Under 360 English. So this is the ITR filing time or ITR filing season. So many investors, they have certain concerns on filing ITRs, income tax returns. And though many will file a few, though many will file a lot of mistakes everyone used to commit. And what eventually leads to this is a delay in processing of your returns. So today we are going to discuss about a few commonly committed mistakes when you file ITR. So stay tuned, keep watching. The first matter of concern is about the deadline. Many overlook this deadline, especially after the COVID period, because everyone has a feeling that every time when government put forward a deadline, there is a higher probability of getting it extended again. But unfortunately or fortunately, this time we can't expect so. Moreover, it looks a bit alarming that the rate of IT filings returns so far is somewhat low. That's what data shows as per the media. Because the last date is 31st of July, and the speed of filing as well as the filing till date, that is somewhat not that much impressive when compared to the second week of July. Hardly 69 lakh filings only has been done, and 7 crore people are yet to be done. That shows a lot of people, they are waiting aside for the last day to come. Never commit that. You please file your ITR as early as possible, because as days go by, when everyone start to rush to access the server, there's a higher probability that you may not able to access the server. That may eventually leads to non-filing of your ITRs. So as early as possible, please file your ITR. The second thing you have to keep it in mind is about the pre-filled data that's shown in the income tax website. For many low income earners, we can find that the pre-filled tax returns are available over there. So how they collect this information is through various organizations where they have dispersed you as income or other payments, salary or dividend TDS or banks fixed deposit or anything, savings interest, or even in the case of tax deductions like from charitable organization that you have done some donations to them. So these data will collide together in the server and that will be pre-filled for you. So you need not enter it again. But many chartered accountants, they are warning people that we should not blindly approve all these pre-filled data, because you have to scrutinize it. Though it's a pre-filled data, the entire responsibility lies on you. If that's an anonymous one, the responsibility lies on you. That will be considered as a false data. So please verify this pre-filled data also with the available documents that's with you. Moreover, sometimes this may cause some sort of disadvantages to you also. For example, if you are a joint account holder of AFD, most probably banks will report the interest income from that particular deposit in both of your names. But for example, if you and your wife have deposited 50 lakh rupees as FD and you are getting 5 lakh rupees as interest, so bank will intimate this as 5 lakh rupee interest earnings in your name as well as your wife's name. But only one need to be take liability of that, not both of you. If both of you take, means that will be the total income will be like 10, 5 plus 1 is 5 plus 5 is equal to 10. So in the pre-filled data, there is a high probability that this income will be shown in your pre-filled data as well as in your wife's pre-filled data. So please scrutinize it, please verify it before approving and submitting it. Other thing is about the senior citizens deduction claimed under section 80 TTA. Usually the pre-filled data that shows only 10,000 rupees as a deduction, not 50,000 rupees. Actually 50,000 rupees is meant for senior citizens. That may not be shown. So please verify. The third point you have to note is about the savings bank interest. It's very difficult for us to take all the savings bank's account and its interest. Obviously, I do agree. But many of us used to ignore the tedious task of calculating SB account interest. The new AA statement, that's the annual information statement, that mentions about the savings bank account details also. I do agree that some banks, they won't upload the savings bank interest data to the IT servers. In that case, it won't comes as a pre-filled data. But you have to take care of that. So you have to check the AAS data and to cross check whether all the accounts has been mentioned over there and the interest has been tallied over there. The fourth important thing is about intentionally or unintentionally, some people have a tendency to do hide the income from the previous employers. Nowadays, we know that people are switching from one job to another, one employer to another. So I have seen a lot of people, they are conveniently ignoring convenient forgetfulness they have while filing the ITR. That by neglecting the previous employer's income. That should not happen. Once you switch from one employer to another, probably you may get multiple 16S forms. 16S is a document handed over by the employer mentioning the income, tax deduction, and tax saving investment details, etc. etc. In the previous years, hiding one employer's income was somewhat possible. But this year onwards, AIS data that capture everything, even from multiple 16x forms also. So never try to commit that mistake. And one more thing is about the HR assumption. When you switch from one employer to another, I have seen that many people, they used to forget the HR assumption. So please take care of that also, house and allowance assumption. Other important thing is about the property sale details. Have you sold any property or reinvested in another property that to save the taxes? That's a question. In that case, don't forget about the transaction while filing the returns. Even though the tax has been nullified, that means since you went for reinvestment, the tax has been nullified. It's true. But since the money was reinvested, you have to declare the details in the returns. One other important thing is about the crypto asset declaration. We know that the Union Budget 2022 that announced a 30% crypto taxation. But that would be applicable from the next assessment year on only. That's true. But the question is how you will declare past assets now that the law has been stated. I do agree that a lot of confusion exists on how to declare the crypto asset and its taxation. The simplest way majority of the chartered accountants suggest is to declare the cryptocurrency as an asset. This assessment year is to declare it in the assets and liabilities section under ITR 2. That's the simplest way. Still a lot of ambiguity exists there. Anyway, you please consult with your chartered accountant. One more important thing is about crypto. That is, you can't adjust your gains against your losses, unlike the shares or equities. So never try to offset your losses against the gains. You have to give tax for the gains, but you can't deduct the losses from that. So government is considering the cryptocurrency, it's almost like a lottery. That means almost like a gift or lottery or lucky draw. So there is no option to offset your losses against the gain. We don't know about the future, whether government will take another stance on that. But till now, for the safety of your declaration and to make it avoid the legal hassles, it's better to avoid adjusting the losses carried forward from the cryptocurrency. Other important point I want to remind you is about the stock market traders or commodity traders or F&O traders, whatever it is. Never forget to file your income tax returns before the due date. You please collect your capital gains statements from your broker or from your bank or whoever may be the intermediary. And even if that's loss, you please file with the losses also. Forthcoming years, you can offset it against your gains. So never hesitate to file your returns. So that's all for now. See you in the next episode. Till then, bye from Anu.